Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar is trading somewhat mixed, but remained near weekly highs as US strikes on military targets in the southern Iran unsettled markets and increased safe haven flows. At the same time, investors are now awaiting this Wednesday's Australian inflation report, with the monthly CPI forecast at 0.6% versus the previous high of 1.1%. In comparison, the CPI yearly is expected to fall to 4.4% to 4.6%, and the trimmed mean CPI yearly is seen unchanged at 3.3%, with any upside surprise likely to support the Aussie against the US dollar, although this week we'll also be watching close the premium GDP quarterly and the Fed's preferred inflation gauge, the core PCE price index, with a forecast seen at 0.3%. Technically, though, we can see the market has somewhat buckled and still bear, and therefore expect to see a retreat anywhere from 72 cents if reached, but unlikely as the market is buckling. So I'm expecting a pullback towards the lows of 71 or even to around 70 to 70.80 before a bounce. The slight gap up is now weakening, and I do expect to see it filled as the US dollar firmed after the US forces carried out defensive strikes in southern Iran, targeting missile launch sites and vessels, which has boosted oil prices slightly and safe haven demand, of course, for the US dollar. However, losses in the euro remain limited after President Trump said negotiations with Iran were still proceeding nicely. I'm still holding as a bear, and that is back towards the region of 115 and reassess from there. The market did try and pick up, but again failed, and therefore looking to the downside and reassess from there. Turning to dollar yen, well, the market is still somewhat a little bit uncertain as the intervention threat zone area, which is where we've seen before, could return. Technically, though, we did bounce off that midway point, but it's still buckled. It's still weak MACD, so I am still a bear back to the lows of 157 or 156. Sterling, well, the market is also weaker and filling the previous gap that we saw on Monday, and therefore looking towards the downside risk of 133.70 and reassess from there. I feel the market may find a little bit more weaker play, and that is down towards the lows of 133. Gold looking still a little bit uncertain and could see a pullback towards the region of 4,460 area. The reason behind that is the technicals have failed and the MACD is still somewhat lackluster, and oil could see that gap filled up towards this region somewhere around $94 a barrel and reassess from there. Well, that's a wrap. Thank you for joining me, and as always, look after the interest report. Hope you enjoyed a great start to the day.